Got equity or extra cash? Well, here's what recasting or refinancing can do for you. Maybe you've just sold a home. Maybe you have inheritance, a bonus, savings in the bank, or maybe you just hit the lottery. Either way, you've got options. When you have equity or cash available, there are powerful ways to make that money work for you. You can recast your current mortgage or refinance for a new one. I know these words both sound fancy, and they're not. They're very simple. But knowing the difference can save you tens of thousands, if not hundreds of thousands of dollars. So what is a mortgage recast? A recast is when you have a large sum of money and you put that towards your loan's principal. Then your loan servicer will recast or recalculate your monthly payment with that lower principal. So no new loan, no new rate, just a lower monthly payment. Now let's see the math and how this works. So let's say that you purchased a new home and you're working on selling your former home that has $100,000 in equity when it's all said and done. When that home sells, you can take that $100,000 and you can contribute it towards your principal. So you purchased your home for $800,000 and you put $100,000 down. So your loan was for $700,000 at a rate of 6.5%. Now, you take that $100,000 from the sale and you apply it to your new mortgage. And here's what happens. Your new balance is $600,000. Your new monthly payment, principal and interest, went from $4,474 down to $3,835. A monthly savings of $639. But that's not where the beauty lies. The beauty lies in the money you saved in interest. So over the life of that loan, you will save something like $122,000 less interest paid. You didn't change your rate, you didn't restart your loan, and you didn't repay closing costs. Just one lump sum towards your principal, a small recasting fee, and now you have lower payments and savings of what you would have spent in interest. Now let's do another scenario. Say you got a bonus or inherited $50,000 and you want to free up some monthly cash. If your mortgage balance is $450,000 at a 6.75% rate, recasting that payment could drop your monthly mortgage by about $300 to $350 a month. And that's really nice breathing room. So here's when recasting makes sense. When you want lower monthly payments without having to get a new loan, and when you have a one-time cash infusion opportunity. It's available for most conventional loans, and lenders often require at least $5,000 to $10,000 in order to qualify for a recast. So if you don't know if you're eligible for a recast, check with your loan servicer. Now here's when recasting might not make sense. If you want to shorten your term or lower your rate, a recast doesn't do either of those. If you're paying off higher interest debt first. If your loan type, such as a VA, FHA, or USDA, does not allow for recasting. Or if you're going to need that money soon or keep it as a nest egg because you can't pull it back out. Now let's talk about refinancing or pressing that reset button. A refinance replaces your old loan with a brand new one. New interest rate, new term, new paperwork, new loan. This is the right move when you want to lock in a lower payment, shorten your payoff timeline, or tap into your home equity for home improvements or investments. For example, refinancing was all the rage when rates were in the 3% and 4% range, less so right now. But let's say that you get a rate today at 6.3%, but in 2 years, that rate goes down to a 5.1% range. Now you will need to repay closing costs. And generally speaking, a refinance closing cost is around $3,000 to $5,000, mainly because you have to renew the title policy and reestablish your escrow account. If you plan to stay there more than 3 years, those savings could outweigh the upfront expenses. Now, of course, it is extremely important to have a reputable local lender on your side that can run the scenarios and tell you with honesty whether it makes sense or not. So for example, let's say someone took out a 30-year mortgage and they want to refinance at a lower rate with a lesser term. So they want to do a 15-year term. Your payment will likely increase, but you will save a tremendous amount of interest in lessening the time to pay off that loan. And as long as you have the financial liquidity to do that, then it can be a great step in growing your wealth. So here are the pros of refinancing. You can lower your interest rate. You can shorten your loan term. You can pull equity for renovations or investments. You can remove PMI if your home's value has increased. There are higher upfront costs. It requires a credit check, appraisal, and full underwriting. It restarts your loan's interest schedule, and it's not ideal if you plan to move in the next couple of years. So in a nutshell, recasting is simple and cheap, and it's great if you have cash and are okay with your rate. Refinancing is a little bit more work and cost, but it is great if rates have dropped or if you want to change the terms to pay off your loan sooner. If you're not sure which move fits your situation, feel free to reach out. We most certainly can provide you resources so that you can make the right decision for you.